So we're good to go. So thank you so much, everyone, for coming to day 2 of the SMU+GSV Mission Summit. This panel is called Growth for Good, the Future of Growth Investing. I'm thrilled to be joined by 3 esteemed panelists running 3 different types of firms here in Dallas. The first is Robert Covington, founder and managing partner of Braemont Capital. Next is Minkara, founding partner of Legacy Knight. And last but not least is Dayakar Puskoor, founder and managing partner of Dallas Venture Capital. So this panel, just to give a brief context, is called Growth for Good. And there's 3 themes we're going to touch upon. The first is the background of the 3 men here and their journeys to founding their firms. The second is their experience as running investment firms day to day and the lessons they've learned and the values they want to impart in their organizations. And then the third is the mission of what they're doing, why they're here, and the types of companies they want to support and back to create a better, more fair, more prosperous world. So Robert, I'd love to start with you, a little bit on your background, doing some research, learned that you were an entrepreneur, an investor, you've seen it all, so I'd love to kick it off with a little bit on your story.
Can you hear that? Yeah, there we go. Good to see everybody. So I have a bit of an atypical background for a private equity investor, a little bit later stage investor. I started my career, I was pre-med, went to graduate school to do medicine, and to my mother's great disappointment, ended up leaving graduate school without an MD. I did a master's in epidemiology, which typically I don't tell people because they don't know what it means. Everyone knows what that means now. And then I did a business degree as well, and I started what is now called a SaaS software business, but it was one of the really early ones in the late 90s. And so I was a 24-year-old entrepreneur with right around 100 employees. And one of the funny little stories there is my number 2 guy was about 20 years older than me, and he pulled me into an office one day and he said, "It's almost like you don't have any business experience sometimes." And I was like, well, this is my first job. Like, I worked at the pool, I'd done landscaping jobs, but I never really had a full-time job. And so, that was a very formative part of my career, because I think when you are an entrepreneur, particularly at that age, it either fills you with a really big head or it really humbles you. And in my case, it was probably both, depending on when you ask me. But it was kind of one of these high-flying businesses, and then we had the tech crash, and I was able to save the company, and actually it still exists today. But it was a very difficult experience, and it gave me a deep appreciation for what entrepreneurs do and the challenges. And so for the short part of my bio is for the next 20 plus years, I went to the other side and started investing, and principally with founder entrepreneurs and families. I really just got a kick out of people that wanted to start something, saw the world as a little bit broken and that they could go fix a problem. And that's what I've been doing for the last 20 plus years, is investing behind entrepreneurs and their businesses.
Abe, I'd love to hear a little bit about your story. I know that you're an immigrant and a proud Dallas resident, and would love to hear about what brought you here to this event and your journey.
Yes, thank you. Well, when I heard the event was at SMU, I just couldn't say no. So I graduated here in 2004, SMU Business School, and it's really great to see that we have this caliber event here. It's impressive, and hope to see a lot more. My journey starts about 25 years ago when I came to Dallas, and it was mainly to work for a tech company, so kind of similar to some degree. And kind of throughout the entrepreneurial journey, got to experience kind of 2 sides of the boardroom, being the entrepreneur and then working across the investors, and then eventually got to the other side, and found my way 2013, kind of a unique opportunity to work with Mark Cuban. And what I like to say is, with working with Mark Cuban for almost 8 years, we got to support entrepreneurs, so there's a theme here, from startup to exit. And now, 3.5 years ago, co-founded Legacy Night, where we support entrepreneurs post-exit as a multifamily office. So I had the privilege of working with a lot of entrepreneurs through the Cuban companies, and a lot of tech entrepreneurs, a lot of Shark Tank entrepreneurs, if you watch a show. Those are real investments that we made. It's not just a TV show. We actually invest in these companies, we support these companies, and on few of them, I had the privilege of being through the journey from the first check on Shark Tank to a strategic exit a number of years later. And now at Legacy Night, we are a multifamily office, so basically a wealth management, investment management firm for ultra high net worth. A lot of them are genuine entrepreneurs that sold their businesses and need a different platform that's more customizable to their legacy. So the firm's called Legacy Night. And I'll go through a little bit more information as we talk.
That sounds great. Dayakar, I'd love to pass the mic to you.
Thank you. Sorry for being late. I'm also a little bit under the weather. Just been traveling a lot. Again, it's kind of interesting. My background, from India. It's kind of my mom also wanted me to be a doctor, so she tried very hard, and because everybody is a doctor in our family. So, but I'm glad I didn't become a doctor. My son is becoming a doctor right now. So, so it's interesting. I did my master's in computer science here. After that, worked for Motorola for 10 years as an engineer. Started as a software engineer, doing a lot of geeky stuff. Especially all the base station software and all that. Some of you may know what the base station is if you're in telecom world. So after that, I got moved here. Motorola moved from Boynton Beach to Fort Worth here, and then after working 10 years at Motorola, started my own company. I never thought I'm going to do Motorola, but the company called JP Mobile here in Dallas. This company, we raised a bunch of money, and never thought, to be honest with you, I didn't even have any business plan. It's kind of I always tell about I happen to be right time, right place when the mobile and mobile software is really kind of growing. So we raised a bunch of money, $55 million in 2000, planned to go public. None ever happened, didn't go public. But we exited this company in 2006 to a company called Good Technology. Then eventually we were acquired by Motorola. It's kind of interesting how the life goes on. Then I had a short stint at Microsoft. I could not move to Seattle. Once you live in Dallas, I don't think you can move to Dallas. One thing I consider, raising kids, raising family and all is the best place to do. So started my own venture, but people told me you cannot do in Dallas. You had to come to the Bay Area, especially if you want to do early stage investments. So it's been pretty hard, being in Dallas, and we don't have we used to have ecosystem. It's called, I think, Flow 16, I think, in the Big Cal area, right? So unfortunately, the whole that industry is gone. But luckily, started in 2012 as a fund called Naya Ventures. This fund, we invested very early stage, companies here, the Bay Area and Seattle. But we changed the name 2021 to Dallas Venture Capital because I feel really been here for a long time. This is where we wanted to build it. So we are a true cross-border VC between India, in Hyderabad and Dallas. We are $130 million of AUM, the latest fund we raised, and invested close to 30 companies so far. And done some exits, some money returned to our investors. So far, so good.
So it sounds like 3 different backgrounds, 3 different journeys, but we're all in the same place, and the common thread is your passion for supporting entrepreneurs. It's an interesting segue into the past few years. And I'm preparing for this panel was reflecting, if we were to do this in May 2020, May 2021, and May 2023 now, there would be 3 different tones, 3 different market environments, but the common thread has been this change. So I'd love to hear the lessons you've learned, maybe starting with you, Robert, from your experience as an entrepreneur when times were in the late 90s, early 2000s, and what parallels you see to today and what lessons you share with entrepreneurs you work with in terms of navigating this environment.
I thought it was a good question. It's I go back. One of the things I love to do with my team, I started out as an entrepreneur, and then I used to do early stage investing, and now I do later stage growth. So we'll write $50 to $200 million equity checks into businesses. So it's much later stage, but there's still growth investments, and it's almost exclusively with founders. They're just bigger businesses. And it's funny, regardless of the stage of the investment, when you go look at the investment memos, you just realize how many things you get wrong. And usually you think when somebody's later stage, you have a better sense of what the world will look like in 2 or 3 years. And if you haven't watched the Buffett Munger annual meeting, go watch pieces of it. Those guys are timeless. It's just unbelievable. And the things that they have conviction on and they don't. And so I'll go look at those old memos, and none of my memos had a pandemic. So I missed it. And none of my memos had the '08 crisis. I missed it. And you just go through and you just realize these huge events that have massive impacts on whether a business survives or grows or where people will live or how they'll interact with one another. It's very hard to know huge driving forces in the businesses. And so what I like to say is, when I think about, there's a lot of capital out there, there's a lot of entrepreneurs, there's a lot of ideas, there's not a lot of great teams. And I always, when I look at investment, I'm trying to figure out who are the teams when it gets bad. I go, wow, I'd really like to be with them. Maybe it's the foxhole analogy, or as some people like to say, who would you like to get in trouble with? And invariably it happens. And you don't want it to happen, but it happens. And so what probably my big lesson over the last, it's less about 20, 22, 20, whatever the year is. It's more about, did I pick teams that I wanted to get in trouble with? Because it happened. And then how did we handle that? And were we right about our assessment of that team? Because it was really hard to know some of the other things. And so, my lesson for the group, or the thing that we think about when we invest, is really focusing on the teams, not on the people, not on an individual person, but the team that you're backing. And then what are the things that you don't know that could really hurt your business? They're not knowable, but where you go, you know what, if something shows up out of left field, I'm comfortable trying to work that problem with this group of people. And that's been kind of consistent throughout my career. And where I've gotten that wrong, it's really hard, because you're stuck with these teams, and if they're not people you want to solve hard problems with, you really don't have a choice. It's not very fun.
Yeah, I have to agree. It really is all about the entrepreneurs and the team. With Cuban, we used to invest with a lot of early stage companies, and it's even more important at that stage. If you're not investing, you're really investing in the jockey and their ability to take that vision and execute on it. And part of that is building the right team around them. It's also the same case, because right now at Legacy Night we do invest at growth stage, and it's the same type of insight that we have. Is even at that growth stage, it's about the entrepreneur, and those life events are going to happen. They're unpredictable, but challenges happen even without those big events. Companies go through challenges every day. It's not like a COVID event that's going to really, in some cases it's going to disrupt, but it's the entrepreneurs who have the ability and the grit to always figure out a way. And I've worked with a lot of entrepreneurs when you think, okay, it's game over, they figure out a way. They figure out a way how to keep the business alive. They figure out a way how to keep their clients engaged. They figure out a way how to bring in new investors to the table, and they're always kind of learning and expanding, even in kind of worst case scenarios, and they come out of it. The entrepreneurs who kind of don't have that DNA in them, if they're not surrounding themselves with the right people and trusting them, most likely they're going to fail, and it's unfortunate. Now, if they take that as a learning lesson experience, then you have a future entrepreneur that's worth investing in. But what we've seen is it's kind of a rare breed of entrepreneurs that can handle any situation that you throw at them, and these are the entrepreneurs that you want to invest in, because to your point, things are going to go bad, and you want to be supporting the right team when things go wrong. And there's always a way. There's always a way to go through those challenges.
Yeah, I totally agree about team. Team. We kind of call it team, TAM, traction, right? So those three things, triple T's. For me, like if you look at pandemic, taught a lot of lessons to all of us, right? Especially if you had to invest before, I would not invest until I meet these entrepreneurs or founders for a lunch or dinner for a drinks, right? So we had all learn go virtual and start learning how do you judge people on virtual, like by watching them how they answer these questions on video. Pretty much I think it took a while for me to judge people, how genuine they are when they're answering, but I'm happy to tell you we actually did 4 investments during pandemic. One of the high growth company in the cloud space doing really well. So I think a lot of lessons learned really during pandemic, and the technology made a huge difference, right? All of us, able to move from a physical world to virtual world, and a lot of technology, IT really helped. No matter where you are, like you're able to, do your work. That's the reason really, as you know, like 2021, even startup valuations also went up because so many companies started and a lot of funding also available. But now really what I see, companies who had really real business, what I kind of call it, if they're giving a painkiller for an IT department or a operational buyer, and they have a customer. I think that's what, as an entrepreneur, I went through. As I said, like raising $55 million. Unfortunately, 9/11 happened. Customers were paying maybe $500,000. They were not willing to even pay $20,000, right? So you had to adjust to the market. So I think as both of them mentioned, like a good point. As you want to invest in a team which can adapt, right? Like especially what's happening with the market and how you're able to cut down your cost too. That's number one thing we did. Make sure like really everybody has at least 18 to 24 month cash to make it. So I think those are lessons I learned, and also trying to make sure like impress on some of them listen, some of them don't. So people don't listen, they will learn.
Yeah, I mean, I think that the common thread through all of that is that almost the theme of pro-entropic investing is as times get worse, you need to be ready to double down with the teams you work with. One of the things when doing research for this panel I noticed is that all 3 of your firms are ultimately about relationships. It's in the name of kind of how your approach Legacy Night. It's all about relationships, from founding a company to managing the next generation of that. And it seems like Dallas Venture Capital is creating this international bond between what's happening in India, what's happening in Dallas and Texas. So I'd love to hear about how you think about building those connections, both with entrepreneurs you're already working with and community members and potential founders that you'd love to fund. So maybe starting with you, Dayakar.
Sure. So I think, as you said, relationship is the most important thing. I try to tell my kids the networking relationships, that's what it matters. No matter you're a doctor, you're an engineer, what are the profession you are in. So for us, it's been really good, especially Dallas has so many Fortune 500 companies and more people are moving here. So we are able to show the value of Dallas to a lot of international companies. Not only in India, we also invested 1 or 2 companies in Canada too. And 1 or 2 we are looking at from Israel right now. So, but them really getting that customer access, really, I think, right? So making sure like you're building relationship with a lot of CXOs in Dallas. That's one thing really we've been doing, and we continue to do that. I think working with institutions like SMU and UT Dallas and all that. Love to say, happy to tell you, like John is here. Every year we've been getting 2 students from SMU to work with us almost for a whole semester. It's been a wonderful experience for us and for also students. So I think that's where we feel like really working with the local community, and Dallas has a great opportunity to create entrepreneurs. I've been wanting to work with John and SMU and other people. How do we get more people from their comfortable chairs here to start more companies in the B2B side? Because we have so much opportunity here. We don't see that many entrepreneurs coming out here. Hopefully we'll do more.
I agree. We're big supporters of companies that are founded in Texas, and can preferably DFW as well. But you're right. I mean, it's all about trust, relationships, integrity, and you never know where these relationships would lead. So even if you're in your current job, maybe you're not an entrepreneur, make sure you don't burn any bridges, no matter where you go. Just kind of, you have to really nourish those relationships, and you never know when you're off to your next opportunity in another business or another company. The universe kind of conspires in very interesting ways, and if you maintain those relationships, they'll flourish in a very positive way. When it comes to the name, we also kind of thought a lot about the name of the firm. So Legacy and Knight, we have two kinds of families as well that we work with, and we kind of Knight. The Knight is a protector of the family's legacy, Knight strategic piece on the chessboard. So we thought a lot about it. But also the families we work with, we have our core families that where we are their family office. We call them legacy families, and we have Knight families. We call them our Knights. And it it's unique in our space. But whenever we have an outside family that wants to co-invest with us, we call them Knights. And I always get calls, how can I be a Knight? Is there a list? So it kind of feeds into kind of the persona of the firm and the culture internally as well.
I'll hit the piece on the name. Our firm is Braemont. Similarly, it was a name that was available, so that was part of it. It's really hard to get names now. But a Bray is a hill, a Mont's a mountain. When you're in these businesses, you're climbing a lot of hills, and then you have these big mountains, whether it's COVID or some big challenge, and so we thought it was a good metaphor, and the URL was available. I think on the what was the previous question before the name that you were
thinking about? Relationships.
Yeah, so I mean, it's a big part of what we do. You know, at the end of the day, we want to be institutional because we have to have something that can scale. I always say our first investment at Braemont is Braemont. Most private equity and growth equity people are terrible at running businesses because most of them haven't. They're unique. Most people worked in consulting or banking, and there's nothing wrong with that, but they haven't built a business. And so when it comes to building relationships, we measure it, we scoreboard it, we have a set of things that we look at. And yet it's interesting, if you look at the set of criteria that we look at, the number one determinant of the power of a relationship is what we call our gut score. It's when you meet with someone. I meet you and I go, there's just something about her. I don't know what it is, but we're going to do something together. And you put it in, and it's not, well, there are sorts of deals. They ran a company. And so we track all of that. So we're systematic about it, but we also leave ourselves space to be creative. The second thing we do is, there's a great book, if you haven't read it, called Range. Most people in private equity, growth equity, there's a real focus on specialization, sector specialization, thematic specialization. And what I've found is you have to have a little bit of space to roam, where you meet someone and you go, there's something there's something about what they're doing, and it allows you to be entrepreneurial and go learn. And part of why we embrace that at our firm, it's just the way we do it, is that we just think the world changes a lot. And so we want to have the space to where we can get really good at, you give me 10 years, I can go be a heart surgeon. So if you give me time, we can learn things, but we have to have space to learn new things. And so when we look at our relationships, we also want to have the ability to roam. We're like, that's a really interesting person. I was walking in this morning with a young guy that had some packaging beverage business that makes cocktails. He was trying to get me to drink a cocktail at 8 a.m. I was like, I can't. But I thought it was interesting because I go, that's interesting. And we know people at Coca-Cola, and you should talk to this guy. And so it's kind of that ability with partnerships, when you see talented people solving an interesting problem, where it sparks something in your head, the ability to go, I want to go learn something about that, and balancing that with you can't go everywhere. And so we do tend to focus, you take the southern U.S., it has 12 of the 15 fastest growing cities and the largest economy in the world. It's less about Dallas. I mean, Dallas is great, but it'd be foolish to get on an airplane and fly somewhere else when you've got one of the fastest growing cities in the world right here. And so we're lazy. We're like, well, we should go to Atlanta. I'm from there. We should go to Dallas. We live here. Austin, Texas has a lot of growth. Raleigh, Charlotte. So we tend to, with our relationships, we don't mind going to hard places to get to, or building networks with people that we don't know well. But usually there's got to be an underlying rationale that's compelling. And I think what you hear from us is it's pretty hard to leave a place like Dallas when people are coming to you. I mean, look at the growth of SMU. People are coming to you, and there's so many interesting businesses that are getting started here. I don't know if I answered your question.
Just to follow on to relationships, I mean, it's relationships with all the stakeholders involved in your business. So it's not just your clients, prospect, investments, or CEOs. It's your employees, it's your vendors, it's your local community. And you know what's great about Dallas is it's such a collaborative environment, and I hear that from a lot of kind of colleagues that come from different states, especially in the investment world, and they're surprised how collaborative even the investment communities here. East Coast, West Coast, if you have a great investment opportunity, you're not sharing it with anyone. In Dallas, it's you kind of get a sense that, oh, you know, I know another investor that would be great and a huge value add for this investment. Let's share it with them. And if they give me positive feedback, that's more validation on my thesis. And together, we're more of a kind of a force than just us doing it on our own and taking all the credit. And we see that across the board, not just the kind of investment space. Dallas is very welcoming. I think that's an asset we have.
It's a positive sum versus zero sum mindset, which helps over time. So there's a U.S. congressperson whose personal motto, I won't say who the congressperson is, but it's resting is rusting. And all three of you would be considered maybe emerging managers. And you've worked with great legendary entrepreneurs, great investment firms, built businesses. But how do you think about continuing to learn and improve and develop your own personal learning, but also the firms that you're leading? Whoever wants to start, feel free.
Yeah, I think, so the question is like basically the difference between emerging managers versus like, okay. Yeah, so if you look at really, to come into venture, especially there are 3 or 4 ways you can come in, right? One, you worked at a firm, as an analyst and associate, a principal, become a partner, then you leave and start your own firm. Second, really, people like me who start a company, sold a company, maybe start your own firm, and you had to learn. I thought like, what is the big difference between starting a company and venture fund? Totally different, really. So you had to learn a lot when you come from as an entrepreneur. And third one, really, some worked in some pretty big banks that have excellent connections with the LPs, investors. So they're able to raise capital and also hire us on the team. So the 3 ways of coming to venture are, I'm pretty sure, maybe growth side also maybe a little different. But early stage investment, those are 3 ways people come into venture. So as a emerging manager, you definitely have advantages and disadvantages, right? Advantage is really you can set your own way of doing it. For example, I had an opportunity to actually go and join a bigger firm in the Bay Area. I didn't do it, so I started here. But to build and even raise capital is hard. Right, so we went through that, and but I was able to put my own thesis, how we want it, where I add a value, especially I looked at it. I don't have any experience at all in the B2C side, right? Only thing is the B2B, and that's where we invest because most of the people work for me. They are VP of engineering, CTOs, CIOs in different companies. So that's the way I felt like I can help these companies who are so I think that's the advantage I have. But disadvantage I have really, I do not have that experience. Gone through like a in a bigger firm. So last 10 years I'm learning a lot, and now hopefully with those lessons we do a better job. But as a established firm, they have some advantages, and I can tell you like some of the deals they get, right? Especially what I kind of call a blessed founder in the Bay Area or some of the areas. They already kind of gone through a company and exited a company. Most of the time they go to bigger firms, coming to a smaller, emerging managers. So I think there are advantages, disadvantages, between these two. But I really feel like we have grown and continue to learn, and we are able to nurture. Our team right now has grown from, it used to be only 2 people, now close to 13 here in India. So we're able to nurture a lot of these young associates right now with our experience.
Yeah, I agree. I think I mean, as an entrepreneur, you have this thirst for knowledge. And I believe great entrepreneurs become eventually great investors because they're always digging deeper. And an entrepreneur has to manage every aspect of their business. When they become investors, they maybe don't have to get as involved on the operational side, but they have enough expertise to be an advisor and guide the CEO, founder that they invested in. And it's a continuous process. I mean, you're learning every day. You're learning about your business, you're learning about your competitors, you're learning about your customers. And as an investor, you're kind of in a different, you have a different perspective because some investors kind of focus on one specific category and some are more generalists. So it depends on your appetite for learning, how broad you want to be or how deep you want to be.
One of the things I do when we're interviewing people to come work at Braemont, and I was the number 2 guy at a very large growth equity firm, and kind of blew all that up because I wanted to start a more mission-minded firm. So we'll get to that later. But I love asking people what they're reading, what they're tinkering with, what they're looking at. With the internet today, there's endless possibilities to go down rat holes on things that are, and I bought a mandolin the other day, and my wife was like, "What are you doing? You don't even play an instrument." I was like, "I'm going to learn it." And then, of course, it's got dust all over it. And so sometimes these explorations are not terribly productive, but there is something, entrepreneurs are quirky. They see the world as broken. Like there's otherwise the business, there's something not right. It needs to get fixed. It's not done the right way. And yeah, I'm very long on the brokenness of the world, that it's perpetually breaking, right? And you can be philosophical about that, or you can just look at it, and it's, whether it's roads falling apart or buildings or things that need to get fixed. And so, and we're going to talk about AI in a second, but I'm very optimistic about, in the long term, things will continue to break down and not work the way we want them. And there'll be some entrepreneur that's like, I mean, you worked with one, both of you were ones, you saw something that was wrong, and you're like, I got to go fix that. So much so that you left a job, maybe a really great paying job, to go do something that doesn't make a lot of sense. And so I'm always interested in people that do that. What are they reading? What are they looking at? What are they thinking about? And it's interesting. And the benefit you have when you do what we've done for a long time is you start to collect people that are quirky. And I mean that in a good way. They're interesting, and when you hear what they're reading, you go, or what they're looking at or thinking about, you go, well, that's more interesting. I'm going to go try to understand that. I'm going to go try to understand that. So if you're younger in the audience, I would encourage you, your friends or people that are older that do really interesting things, ask them what they're reading, what they're interested in, what takes them into these kind of hours of getting lost. You find with really great entrepreneurs, take a Thomas Edison, where you just read these biographies, like the guy would just stay in his lab, and his poor family, I don't know if he had a family, but he would just get lost in the lab for days at a time and forget to eat. So I would encourage you to do that. And most of the people that we think of as the prototypical entrepreneur in tech, the Steve Jobs, the Bill Gateses, well, of course they were that way. But there's a tremendous number of really successful entrepreneurs that are not the household names that are the same way. They get really excited about the fact that cord is not positioned the right way and it's causing a problem, and they figure out there's a market to fix cords.
So how many entrepreneurs in the audience today? Raise your hand.
Oh, that's good.
Not bad. Yeah.
So as we just saw, we have a lot of entrepreneurs in the audience, and you mentioned that, Robert, you said the world is broken, we need to fix things. That's been a common theme that we've heard throughout the conference. So I'd love to hear what problems you're looking to back, or the people that are trying to solve huge problems. What do you see as huge opportunities, potentially huge challenges, but huge opportunities to create a lot of impact and good returns as well?
I'll hit one thing because there's a bunch. We have within Braemont, we have what we call ideation, and we've tried to model it off of what Bell Labs did. They created, I think still they produce the most Nobel laureates ever. They're really good at research, and we're not very good at research. So we're like, look, they were really good at it. Let's copy them. you're allowed to plagiarize and invest. You can just steal people's ideas. And so we were like, they're really good at it. What Richard Hamming did, let's see if we can do that. So we have a group of people in our organization. We spend a lot of time trying to identify themes that we want to go invest in, and then we go study them. Because we're not venture investors, we can't be studying things that are, emerging. They have to exist. They have to be real businesses. And so, the benefit of that is that you can invest in companies like we just invested in a business that's got 1,000 employees. That's a real company. It's got a lot of people. It's got a lot of earnings. But we've been spending a lot of time in growth businesses in some traditional industries where they're leveraging technology to really change the way they go to market. So, a lot of people at this conference have a background of like Michael Moe of investing in education. We just invested just shy of $100 million in a business that is a very basic business. So if you're a 7-Eleven, there's refrigeration units there. And this is just one example. If you go to Starbucks, there's coffee machines there. This business does the maintenance and repair of those units, but they do it with a lot of technology, and so they're growing much faster than their competition because how they train people, how they manage the workforce, which is very hard to train skilled workers in today's post-COVID environment, how they train them, how they motivate them, how they allocate them to the work that needs to get done, and how they do it at a higher quality and a lower cost versus it being done internally at Starbucks or at 7-Eleven at Target is what makes the business unique. So it's a business service. They're repairing refrigeration units. It's mission critical, but what makes them special is the way they go about executing that value prop. But it's so we aren't doing cutting edge tech, what's the next AI bot or whatever, but we are absolutely interested in how technology can take very traditional businesses and supercharge them. And so that's just one example.
It's great. So we're more generalist in our investment strategy. We're more heavily weighted on wealth preservation, just the way we're set up. So we invest in a lot of funds and managers, and we're beginning to start investing in emerging managers. And then opportunistically, we invest in companies that are at a growth stage, preferably tech-enabled. You might be familiar with the Oura Ring. We did. I'm sure I've seen some of you have the Oura Ring today. We invested in a company called Cart.com that's kind of disrupting the Shopify model, based in Austin. So we're proud of that. Texas-based entrepreneur. So these are kind of the opportunistic tech-enabled business where we see a really rock star CEO founder that has the right vision and the kind of the team around him or her to execute on their strategy to disrupt some of the bigger players in the market space. But back to what you were saying is like we see our business as a business that we're continuously innovating in as well. So we're always looking at ourselves as a startup, even though you don't hear that from a multifamily office company, but we're always innovating. We kind of bring the entrepreneurial kind of feel to a multifamily office, and that's how our entrepreneurial mindset on kind of changing that space, which is kind of to date has been very institutional.
Thank you. So as I mentioned, we are very focused on the B2B software. Within that, also it's an ocean, if you look at it, right? So we focus what we kind of call an IT buyer, information technology buyer of our companies, or also operation technology buyer, right? So why the IT buyer is a sweet spot for us, as I mentioned before, because of our relationships, with the companies and also a lot of technology people, So if you look at what we've been investing a lot on the, what we call it DevOps, DevSecOps, Cloud Ops. I kind of call it, we try to look for companies who are making, are manufacturing cement and iron instead of doing the buildings. So that's what, our 50 to 60% investments go into those areas. And we invest mainly pre-Series A, Series A. That means the company has at least a product market fit and already has at least a $1 million annual recurring revenue. Then our goal is how do we take them from 1 to 10? That's our, that's what we focus. After that, really, people like Robert can come and invest really, bigger checks. Because look, our fund size is 130. He writes $100 million checks, right? Like so, that's where we work with a lot of, funds. And when you talk about relationships, some seed funds and people who are doing Series A's and the growth funds too. So it's been a pretty interesting, investing in those areas. We also invest in the what I kind of call intelligent applications. If you look at, data has become a new oil right now, right? Pretty much every company has so much data. They would like to do something with it, right? And they would like to make sure like their employees get more productive or really sell their products better. So that's where really we invested a company actually locally here, started to, UT Dallas, and then really, a company called Amplify. We also did 3 investments, all in the data area in Austin, pretty much. One of them, a company called Vivioda, helping, car manufacturers, while they are building, modeling, and they spend $1 billion, my understanding is, right? So to able to take petabytes of data and make some sense out of it. So that's where really our, focus has been, and continue to look for companies, focusing on those two, IT buyer and OT buyer.
That's great. So yeah, so Texas entrepreneurs don't have to leave Texas anymore.
Yeah.
You can pre-seed to A with you, and then B+ with us, and then later stage with you.
And people are coming to Texas more and more. So, I mean, the growth is very exciting. So 2 more questions. They're both going to be focused on looking forward to the future. The first is about Gen Z. We always think about at our firm that if you want to understand the future, look at young people, because they're a leading indicator of where the world's going. And specifically tying that into AI, there's been a lot of talk about will AI replace, what jobs will it replace, how will it disrupt work? And I'd be curious to hear your advice for a 23-year-old just starting out in this industry. There may be a biographical element to this question in terms of how these new tools, these new technology trends will shape the investment business in general, the companies you're looking at, and how you see this playing out 5 years from now.
You want to start? Yeah. Especially the AI has really, changing unbelievable, right? I never expected it's going. I know my master thesis was on AI. We were writing papers, but we could not prove anything because we did not have the computing power to do it. So now with what happening with especially with Microsoft investing $10 billion, and just to that day I wanted to show my team, what does it take to be a B2B SaaS VC? Amazing, it came exactly what I was thinking. It's almost reading my mind, right? So, but at the same time, I know like there's a lot of anxiety, people losing jobs and all that, right? So I kind of give a best example, there is no way, especially within our industry, when you're talking about analysts or associates, they're not gonna be replaced by AI, I can tell you that. There's no way, right? Because end of the day, really, it can, give a lot of data and make our analysts and associates more productive, because before they were, researching, going and Googling, whatever it is, and kind of trying to put together a memo for our IC committee and all that. A lot of maybe almost 60-70% of that work can be done by AI right now, right? But still, that analyst or associate, they had to use their intellectual stuff and able to use their human side of it. Because as we just talked about, end of the day, the team, right? And when they talk to, first call when they have, before we talking to any companies, any founders, what did they find about that entrepreneur, right? I think there's no way AI can do that one, right? And so I think AI will definitely enhance a lot of, there are some jobs will be replaced. There's no question about it, right? But as long as you know what you want to do, and make sure you can really use AI to be more productive. I think that's what, if you can do that one, you don't have to worry about.
Yeah, I agree. I think it's right now it's a great productivity tool. I'll give you an example. So my brother has a branding advertising agency, and I started kind of exploring OpenAI right like in December of last year, and I shared it with him. And when he discovered what it can do, he shared it to his whole team, and he said, "Look, this is a great tool. Everyone needs to start learning it, and you have no excuses not to deliver on time in terms of from a content perspective." So he's empowering his team now. If his team doesn't take this tool to grow and become more productive, then maybe they shouldn't be in that position. So I think those are the jobs that when people say that we're going to see some jobs shift, well, it's the kind of unproductive workforce that might shift. But I think it's a great productivity tool. We're going to see it's definitely the early stage, even though as fast as it's growing, I think we're going to see a lot more. But it's the same as like the internet. When the internet kind of came in as this disruptive wave, people were saying the same thing. Oh, this internet's going to, we're going to see a lot of jobs get impacted. We did, but we also saw a lot of job creation in the process. I think that's the same thing with AI.
We, even though we invest later stage, it's one of the first questions we look at is I'm a huge believer in what's happening. I view it more as, it's interesting that Microsoft's the leader, right, or one of the leaders right now, because I almost view it as a future operating system for everything that we do. I have a daughter that's graduating from college, so she's one of those Gen Zers, and she's like, should I move to Silicon Valley and be an AI? Which maybe you should, but I look at it as this incredibly powerful tool that will, like my mobile device, like a DOS operating system, but with incredible powerful capabilities. I mean, you were talking about advertising. I have a friend that he runs the advertising. He has an agency, but his big client is Nike. And I was meeting with him the other day. He's actually a Fort Worth guy. It's an amazing story that he got Nike's business. And he said, there's things that we did 3 years ago that AI can do, and we will get paid zero for them. And then there's things that we can do that we never thought we can do. And he's like, I don't know if I'm excited because we were the disruptor 15, 20 years ago. And now I'm looking at this going, there's a lot of things we're charging people for that ought to be free. And so, what I worry about from a Gen Z standpoint is there's a lot of these service jobs where it's great to say there's going to be a lot of neat jobs created and a lot of great opportunities and existing businesses that are able to do things they never could have done before. But there'll be a lot of jobs lost, and there's people that were trained to do things, and they got to figure out how to retool and how to get retrained. And it's great on a sheet of paper, but it's really hard. So, but we are, I view it, like I said, as an operating system. And so if I'm a Gen Zer, I'm looking at, if I assume most basic knowledge and most basic problem solving can be done by a computer, how can I use that as a tool to be really effective in a new job? I'll end with this. I should have gotten a master's in psychology because I spend most of my time not building models and doing math, but advising and counseling CEOs. AI doesn't do that very well. But it's really good at helping me analyze numbers. So I'll probably be able to go, could you give me an updated free cash flow analysis on these 3 metrics? And I won't need to ask an analyst. The tool will just do it for me. And that's actually pretty cool. So I think I'm pretty bullish on what it allows to do.
Yeah, I think the aim is that it'll help people do what only people can do, which is work with people and help entrepreneurs achieve their dreams. So our final question is going to be about the mission movement, the reason why we're assembling this conference. And the whole thesis that we have at GSV is that the best companies in the future will have the ambition of a for-profit and the heart of a nonprofit. And love to hear about, as you're both building firms and identifying and investing in game-changing companies, what indicators you're seeing of this movement and people who are trying to do things with purpose, and where you could see that going forward in the future.
Sure. One of the companies we invested, this started in India. Some of you must have heard like an institution called IITs, Indian Institute of Technologies, all like a 21, 22-year-old kids. It's amazing. There's a company called Hyperwatch. This is 10 years back almost, right? They're in the deep learning space, doing the facial recognition software basically, or any type of identification of the objects and all that. So this company, basically now able to take a mission. Especially, they could have focused on a lot of areas, but they focused on how they can really, solve a problem for, especially underprivileged, in the countries like Vietnam, where somebody wants to get a less than $1,000 loan, how fast they can get. Especially during pandemic, instead of going to a bank, before they had to go to a bank, they had to submit an application and all that kind of stuff. Now they're able to do everything from their mobile, right? So that's really enabling, those underprivileged able to get a loan, which can really help them the micro loans and all that for their own small businesses and all that. Other thing also, we have seen the same company actually started what they call a hyperverge academy. The academy to make sure like provide jobs for people who already got degrees, but like they don't have skills to be in the digital area. So they have created a 6 months program. Every employee contribute their time and money, and also they make all the investors and also all the partners, customers contribute for that fund for academy. And they already employed close to 120 people, non-employable people. So I think some of the great stuff, some of our, these young people are doing amazing work. Another company focus on mainly getting underprivileged, kids who cannot travel for this, sports. A lot of them, especially, can be from India, Brazil, or something. They had to compete here. They may not have the money to travel, so they focus on those kids, basically. So the things they're doing, we've been trying to also kind of make sure encourage and contribute from our own GP fund to some of these activities.
Yeah, so I recall 10 years ago working with a lot of early stage companies. They looked at impact almost like a box they needed to check, like a marketing play. Like, okay, let's find the right organization, and maybe we can donate X amount of our proceeds because it'll make us look better. Maybe the investors would like us better, our customers would like us better. But it wasn't truly driven internally from a sense of kind of mission and purpose. What I'm seeing now is the entrepreneurs are truly driven. So when you actually see them announcing that they do have a partnership that is impact-based, it's an authentic partnership. It's not just a marketing play. And we're beginning to see more of that. I think that's where the true impact is. And where we sit as investors, I mean, the way we see impact is supporting entrepreneurs so they could be impactful in their own way. So we're all trying to support each other. And back to the Dallas community, I think we see a lot of that here. But yes, I think it's authenticity now is more, you can see it more in mission-driven companies.
I know we're almost out of time, so I'll be quick. This is something I'm really passionate about. It's why I left to start Braemont, and I think there's a kind of a broader philosophical conversation around this. But for us, one of my big conclusions is you'd see a lot of the box checking, and I had this kind of aha talking to different people I look up to and admire, and there's just dignity in all sorts of kind of work. Someone mowing your lawn, cleaning your bed, like there's just work has dignity. It's not just you're a private equity person writing big checks. And so, what we're really focused on is how do you help build companies that are winning? And when businesses win and you have people that are leading those businesses that have a heart, it's good for the community. It's good for the people that work there. It's fulfilling. It's not self-aggrandizing, and it's and there's a lot of dignity that comes in that. And so one of the things that we're really focused on is how do we view our work as not a job but as a vocation, where you go, this is important. That business that serves Starbucks and helps it creates jobs. And I'll end with this. One of my good friends runs a very successful nonprofit, and he always asks me the question. He's like, do you think it's more valuable for a really successful for-profit business to get started in Dallas or for us to do what we're doing? And I know what he's getting at, because there's a force multiplier if you have a company and it creates jobs, and those jobs create, there's the multiplier effect there is remarkable. And the answer is both, but we really are focused on how do we pour into these businesses and help them grow and treat all work with dignity. And it also means that the profit motive that is so important when you invest, that we do that in a way, people give us money because we make them money. They don't give us money because we're nice guys. If we don't make people money, they don't give us money anymore. But how do you do that in a way where you're not ruthless? How do you do that in a way where you treat your community and the people that work in these businesses with dignity? And there's not a playbook for that. You have to look at the circumstances and you have to go, what's the right thing to do there? How would I want to be treated? And that's a little atypical in the investment world. So anyway.
Well, hopefully this conference, the panelists on this stage can help that go from atypical to the norm. So thank you so much for an awesome conversation.